I just wanted to do a quick review about what happened yesterday or over the night as well. Um, so, as you can see, we have the dollar index on an hourly chart. I will show you some lipstick. Yeah, Diego, I was at your place last week around this time, and we were talking about what should happen. Um, so we were bullish on the dollar index and bearish on every other asset. So what happened was we had a weekly fair value gap from here to here. And you can see it be better at this. See this high of this candle and the low of that candle. There's a little separation between those. See this and that. And we dropped down here and then we repelled and now we are attacking buy side. See here, this was pre-NFP. As you can see here, we dropped down here into this little fair value gap and then we dropped down initially on NFP, took sell side below this low, opposing liquidity, into this fair value gap. As you can see, the precision is insane. And then we repelled and went higher, attacking this liquidity pool. And now we are about to go for this liquidity pool. We are almost there. That means if the dollar index is bullish, every other asset is bearish. For example, we were talking about the US dollar CAD yesterday. Went like to perfection. We were aiming for this buy side liquidity pool next draw, as you saw it yesterday. Next draw was this one here, and yeah, it's just insanely exploded overnight. We were talking about it here, that the 2 a.m. candle of the London session dropped down into this fair value gap. Spent no time here, just wanted to reach higher. We did a we tried to get a little execution here actually. Here, but yesterday on the video it didn't hit it, strange enough, but anyways, doesn't matter. The interesting part is, as you can see, these little gaps, they have lots of validity, they have lots of power. We have this one here is a little, it's like the same on the weekly chart from dollar index. See, wait, I will switch my cursor. From this high to that low, there was only upside, there was no wick. Those wicks are not overlapping, right? So from here to there, there's a little area. From here to here. Oh, this is the fair value gap. You see, the hourly fair value gap from yesterday, and we dropped down here, here, but so we wicked through it, but the bodies are not closing below. See, and that's what we want to see. And then yeah, yeah, I think it speaks for itself. There was the first buy side liquidity pool. There was the second one, and this is the big one, the third one. But as you can see, it was the community outlook. See, with the same thing in the euro now, long 80%, but that's not our point now. The US dollar CAD. See, the heavy shorts were squeezed, but it's still heavily shorted. So yeah, let's see. But after this move, or after such a move, we go to the sidelines for 1 or 2 days or so. It could continue, but there's no point in trying to get an entry in here. You know, we need some discount levels like yesterday, but you will see that afterwards after this video, because I also try to tape the executions and the live material when we were down here, but somehow it just took the last few minutes of my video, but yeah, the line portion is captured, so yeah, no worries. So this was the US dollar CAD. I think this movement is very impressive. See, we reached, I had the same animation in the video as well. We had a fair value gap here, we had a fair value gap here, we had buy side here. We came up on NFP, but we didn't. The bodies of these candles, they did not break the fair value gap. See, the wick touched the low end of the fair value gap, this one. Yeah, and this is the drawn liquidity. If you see relative equal highs or relative equal lows, like these two, this is where retail traders think their stop loss is safe. And I think I saw a signal out of your group that you wanted to short this one and put your stop here, but yeah, yeah, I think the topic of an algorithm which wants to reach for liquidity is based on time elements. Is yeah, the precision is insane, and yeah, whatever. This is the Nasdaq. Yeah, we rolled lower. You see with the new week opening gap, premium discount means this is where we closed on Friday, yeah, down here, and this is where we opened up on Sunday, up here, and then we rolled down. So we have a gap from here to there, and as you can see, this gap has validity. So we came down and acted as support, it broke through it, touched it, revisited here, and then rolled over. So new week opening gaps, but we will talk about those also in the future as well when we have more time. But highly interesting. They work for about approximately 4 weeks backwards, new week opening gaps. And why did we change the state of delivery here? You see we had, so first of all, we had the SMT, right? Like at 9 o'clock at the opening, 9:30 at the opening here. We rallied higher, took out the London high, had this SMT, so the S&P and Dow Jones were not able to make this higher high. That means this is a stop run because we are anticipating lower prices on the indices because we are bullish on the dollar, right? So I was looking for a short here and wanted to offset it below this low that we were dropping like hell. Nobody could know, but anyways, we're not trying to get the full move. Yeah, we see we have the NFP breaker. I told you, Diego, what a breaker is, but just for the recap, if we have a liquidity pool, like this blue line is here, then we have the rally, which pumps the price above the liquidity pool to suck in the breakout traders or raid the short traders, and then we break below it. These last down close candles for the up move, they are the breaker then. So, and they have, you see how we almost closed it, but it's better to not touch the high end of that. See, so the breaker or every fair value gap, order block, whatever, has more power if the algo doesn't close it fully, you know, like this. If a little portion stays open, opposing to the direction we wanted to go. So we go higher, let a portion open, because we want to go lower. That means the algo is very heavy on selling. Yeah. So I'm going to show you the business executions, but I think you saw it already. Right. So so that was my initial short of the London session, because we also had the same kind of movement here, but I closed it here, shorting here in the fair value gap, shorting here, there, and bought it back here. So yeah, it was about a few $100 demo trading, negative. But this one was pretty nice. I shorted it here, you can see in the video afterwards in this fair value gap. Then we had this pump, but it didn't match with the other indices, so we were not worried about that one. And yeah, it cut off my video somewhere here, even though I have the full animation where it goes through it actually, but it didn't capture it, or so I don't know. But anyways, as you can see, I don't know if something more to tell. I don't know. I don't think so. But this is the next target we want to reach for. This is not today's opening price. Tuesday, 0. So what's important is we have to New York midnight opening price. So you have to set your time zone to New York here. Everything we're talking about is New York time, because the algorithm runs on New York time. Yeah, I think that's it for now, and yeah, if don't hesitate to contact for any questions or whatsoever. I'm happy to answer anything. Yeah, pleasure to work with you, and see you in the next one. Bye bye.